Hello traders, how are you? Vladimir here from Traders Academy Club, and in this video I want to go and summarize and review our trading activity on the last trading week, covering the trading systems that me and my team use. That's the SRS Pro, the Forex Triple B, and the Divergence University trading strategies. So today we are on 14th of March 2022, and the purpose of this video is educational, to show in action how the trades we decide to trade using the trading systems, the SRS Pro, the Triple B, the Divergence University strategies, how and why we decide to go with the trades we do, to explain the little technical signs we are looking to pay attention to when we trade. In the good and the bad times, there were several mistakes which you will see as well, and I want to explain that because it's important to see everything as is, in the good times, in the bad times, with the tips when they work and with the tips when they fail. It's very important to understand. So it was a pretty mixed trading week the last week. After some good run that we've had, the last week was very mixed. As I said before, that Triple B was the main star. The SRS was mixed, and the Divergence University caused the loss. But, and here is the but, the importance of diversification. Does 1 week mean that the one system is better than the other? Absolutely not. And it's important to mention, and it's very important to understand. 1 week does not mean that one strategy work, or one system work, one robot rod, or one service work, or whatever. 1 week is just 1 week of a long run. So please bear in mind and don't do this mistake that all the beginners do. After 1 week, they come up to conclusions that works, that fails. And sadly enough, this is why majority of beginners simply never find anything that works, because they just run from one to other thing, right? It's not like choosing your shoes in a shoe store. This is statistical approach with probabilities, odds, and numbers behind it. It's a business of numbers, and I'll show you exactly what I mean by that. Also talking about the importance of the risk reward. Now, let's begin then. The Forex Triple B would be the very first system I would like to review. As I said, it was a pretty good week. It started very well at the beginning of the week. Then we had several losses, ended up again pretty well. So out of the three, this one was the best, as it respected very important levels, and I'll show that. Also, I want to mention that, of course, all those of you who have the system or the access to the Divergence University course, this is an educational video for you. For those of you who don't have these systems, but you find them as something that you can benefit from in your own trading, you can get your access to them directly from the website. So the forextripleb.com, the SRS, trendrider.com, the divergenceuniversity.com. So just follow the links below in the description or in the pinned comment. There is also an option to get it free with the brokers program. Of course, depends on the country, because not all the brokers accept all the countries. So just get it, click get it now here, and you would have all the options available for you based on your IB. So let's begin with the Triple B. This is also, as you can see, several ideas that you will see here are ideas we were talking about in our Triple B Telegram group. And then we've had our great follow-up that these trades delivered. So what I want to, again, I cannot review all of the trades, as this would be a very, 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 very long video. But I do have 3 trades which I want to discuss. 2 of them were the start of the week. That was the indices. In a bearish sentiment market, what we can do is look to sell. rallies. And that's what we did here. Now, the focus I want to pay attention to in this video, it's all the principles that we use in trade with the trend, but in specific levels. And these levels are the pivot levels. Okay, with combination of multi-pivot levels in multi-days scan. Very important thing to say, the pivot indicator comes with the Triple B system, and it works together with the Forex Triple B filters and trend scan that we have here. So the first one is the S&P. But before that, let's quickly remind what are the trend conditions. In a downtrend, we are working with lower highs, lower lows, and then we are looking for pullbacks to rejection zones, right? Rejection zones, seller zones, are the zones where the sellers took activity. That's the highs, right? From the highs they sell. And the resistances, which are the lows, right? Where the buyers resist before, okay? Now it becomes a resistance. So that usually creates for us a zone of potential rejection. If we have in this area pivots, we know from there we are looking for a good possible setups. This is the very basics for the downtrend. In an uptrend, it's the vice versa. The buy zones are here, okay, with the previous lows. And of course, these are rejection zones, right? They are resistance that became a support, and now it's a rejection zone. 1 and 2, right? So we are looking for these zones if they correspond with pivots. And in a little bit bigger view, if we've had a trend and we flipped by making the lows, we pull back to seller zone, and from here we are looking for this flip of the prices, okay? And again, what we need here, that's our pivots. Right at this area, we are looking for pivots. If we get it there with the trend scan that we have on the Triple B, bam, this is our attack zone. So that's what I want to put the focus on in this video, and to show you how and why the Forex Triple B is so powerful for these trading conditions. So this is the S&P. What did we have here? We've had a clear downtrend, right? A retrace. Look at that. We clean the highs and we reject, right? The highs of the downtrend, and we reject there. It was a corrective movement. After that, what happens is, after the corrective movement, we flip down again. We make lower lows again, and then lower highs. Pretty strong case that the market is saying the sellers are in control. Look at the Bollinger Band, automatic scan by the Triple B, and look at the trend filters. And look at the mainly what I want to pay attention to here. It's the weekly, you see that? The weekly PowerPoint, pivot point, and the daily pivot point right here. That's the zone. So what happens here is we got the correction, right, in 2 waves. You can see here the fractal. We bounce there, we hold the levels, lower highs, lower lows, downtrend. No divergence against on the moving averages. We are pointing down, which means it's a clear downtrend with a clear momentum and sentiment. It's an easy sell, which also delivered all the way down. S&P stands for exactly the same. Look what we have here, guys. Lower highs, lower lows, right? Highs of sellers. That's where sellers take the control. Okay. We come there, we reject, look at the zone. Weekly pivots, daily pivots. That's it. Trend scan, we have a beautiful trend, beautiful momentum, no divergence against on the 4-hour chart, which is a bearish momentum ongoing. Again, easy decision. And this one also delivered, and delivered very, very well. Now, does that necessarily mean that all the trades are going to be winners when we do that? The answer is absolutely not. We are dealing in a market. The odds, what we need to improve is the odds. And the reason for that is the principle of management. The simple principle. I'm not going to dive very, very deep here, but I want to explain a very, very basic, simple logic that you need to understand. If you heard me explaining that already, then you can just skip a little bit or listen again, because this is something that is very important to listen and to remind ourselves. If we work with a 50-50% success rate with 1-to-1 risk-reward ratio, it means we profit one, we lose one, we profit one, we lose one. We cannot make money. We will end up at zero, and we actually pay the commissions and the swaps, etc., etc. We will lose money. So for us, we have two options to change it. Trade with more than 50-50. So that's, let's say 60 against 40. With 1-to-1 risk reward, you will see statistics like that. 3 winners, 2 losses. 6 winners, 4 losses. Okay, and you would end up in a profit. So you can affect your trading results if you trade with 1-to-1 risk reward by improving the accuracy rate, and that's what you do with proven systems like the Triple B. For example, it gives you the trend, it gives you the levels, it gives you the zone to work with. That's all you can need in order to increase these numbers. And that's what we do. This is our aim here in average risk, about 1%. Sometimes it's slightly more, sometimes it's slightly less. In average 1%, and same about the take profits. And you would see that again and again and again and again and again. Okay. So what do we aim to deal with here? 60 to 70% success rate. That's it. We don't need 100% because it does not exist. And whoever will claim you it does simply lies to you. Straightforward. It's a complete lie. It's impossible, because I mean, especially I'm talking about such rate, right? With 1-to-1 risk reward, because it's a business of zero-sum game. And there are a million of people who are looking to do the same like you, to take their own money, to take your money. Okay, so it's important to understand that. And it's, if you can do with 1-to-1 risk reward ratio in average, with 60 to 70% success rate, your performance is going to skyrocket. So that's what I want to show next. Is it going to work? Absolutely always. The answer is no. We are in clear downtrend condition with the Aussie Kiwi, which look what happened here. We got the correction, we flipped to make lower lows, and we are rejecting in pivot level from day before and a pivot resistance in the current day. This is the zone of resistance. It becomes, and we spike here. So technically speaking, it's absolutely brilliant opportunity. In that case, it didn't work out. Later on, it provided a new opportunity. That's a different story. But at that time being, it didn't work out. So what? Statistics. Remember, odds and statistics. And that's the amazing part of the Triple B automatic scan. The next one, which I want to talk about, that will be the SRS. As I said before, the results here are mixed, and that's not what important here. What I want to show here is basically the importance. Again, you can see the risk reward management, of course, in average 1-to-1, but the importance of trending structure supported by key supportive areas and the trading areas. So the same principles I showed before in the Triple B, higher highs, higher lows in an uptrend, and the lows become the supportive zones. So the most important thing for us is, again, the definition, right, of a trend. What are the supportive zones? We have one here and one here. This is a classical resistance that became support. We got an ABCD correction. Now look, this is in terms of the price action. Look at the indicators, the SRS candles. Look at the blue versus the red. Who controls the market here? Just from the candle scan, clearly the buyers. Who controls the on a higher time frame, on a daily and a 4-hour? Clearly the buyers. Where is the momentum and the sentiment? Automatic scan in the SRS. And once again, guys, I would like to repeat and remind, if you would like to get any of the systems or the courses to help in your trading. You can get them directly through these websites, and you can find the websites in the pinned message or the description below the video. There is also an option to get it free with the broker's program. Depends on your IP and your country, of course. So back to the SRS, we got a classical trending structure, classical supportive zone 1, supportive zone 2, which was the resistance before. From any of these zones, we are looking for the price to bounce. And once the ABCD breaks upside, we have an opportunity. Okay? And that's what we got. We got the alert, we got the ABCD breakout, boom, voila. The next one is the pound, the Aussie CAD. Where is my Aussie CAD? Aussie CAD. Okay, here we go. So here is once again the importance of the support. Look at this spike. It comes after this inner area. You see that, guys? Massive bomb upside, inner area, and spike to respect it. Okay, one spike not enough to be called a support usually, but it's retesting this area. So technically speaking, if the buyers are strong enough, they should be pushing upside. ABCD correction in classical trending structure, no signs against us on the higher time frame. Daily 4-hour momentum and sentiment on the SRS are with us. Easy call, which unfortunately failed. You can see it was very close to the profit here. Failed. Part of the game, and it's important to remember there will be days like that and weeks like that. You can't run away of that. We can't run away of that because it's a market. All you have to remember is the same I showed you with the Triple B, the statistics and the odds. There will be weeks like that. There will be weeks like that. And there will be weeks like that, mixed. You can't run away of that. We can't run away of that. It is a business of statistics. And whoever is going to promise you empty promises that their system will deliver all the time is lying to your face. Okay, and I hope you understand it. And it's important to me to say the truth, because if you are going to deal with trading, it's important you understand what you deal with. Not lies, not pink reality, not metaverse reality when everything is good, a real reality in trading, where you're facing traders who are looking to do the same like you do, and that's take your money. Okay, and you have to remember it's all about 60 to 70% success rate with the proven trading systems and proven trading tools in an average of 1-to-1 risk rewarded. That's all you need if you are trading in this sort of style with 1-to-1 risk reward. Okay, I mentioned that because you will see in Divergence University, it's different strategy with bigger risk reward, and you will see the difference in a minute. So the next one would be the pound dollar sell, and again trending structure. Okay, I'm not going to waste much of your time here, but look at that trending structures, right? Support, it becomes a resistance. Straightforward. Support, breaks, resistance. You can see the spikes. Okay, classical trending structures. The corrective movement takes place, right? The ABCD breaks, and here the reason we decided to attack already is because of the flip to the downside, where the sellers take the control right here. Okay, a flip, a small one, but it's a flip in a downtrend. Look at the scan of the candles. Who is in control here? Absolutely clear, the sellers. Who is in control in the daily chart, 4-hour chart? Momentum and sentiment. Absolutely bearish. And when you add to that the analysis, the basic analysis, the levels with the candles, the rejection zones, you get your chances. This one delivered, and delivered very well, both targets. The next one is the different trading approach, where we are heading to more than 1-to-1 risk reward, keeping in mind that we can trade with 50% or less. And what I want to show you here again is this. So we were talking about the 50-50, right? Success rate with one-to-one risk reward, that it cannot work. So we were looking to improve the 60-40 here, or 70-30, right? Now I want to talk about the vice versa, 50-50, but with 1-to-2 in average risk reward. Okay, so we profit 1, but it's twice bigger than the loss. Then we lose 2, and then we profit again. Then we lose 2, and we profit. So look, even with less, you see 4 losses, 3 profits. That's 40 to the reward, 60 to the loss. Okay, you see that. When we do that, what happens here, it's the risk reward starts to be in our favor. -4 + 6 with only 40% success rate. Actually, even a bit more, a bit less than 50% success rate. Less than 50% success rate. Mark the words. Okay, less than 50% success rate with 1-to-2 an average. When I say in average, it could be 2.2 once and 1 point, and next time the average, you get your profits. And that's where we are dealing, what we are doing with the Divergence University trading strategy. You can see this was a bad trading week, absolutely bad. Okay, and I'll show the example here of 1 second. Just want to mark the things I was covering already, of a mistake that one of my team did, and I'll show that here. Okay, but look at that, it was bad trading week. It started somewhere here. Yep. Okay, very bad trading week, right? The bottom line, there will be a period like that, there will be a period like that. And you can see that if you keep your average positive, you would be doing a lot of profits, because with 50% success rate, you would be making money. Even here, in a bad period, if you sum that up, we had 7 losses. Okay, I think 7. Yep, 7 losses with 1%. And then you got your profits. Okay, 255, 179, and 187. Okay, you are back to almost the break-even zone, despite more losses, despite bad trading period. And I want you to remember, it's trading is not about ego, like being right most time, being right more. No, if you decide to go with this trading approach, be prepared that there will be periods that you will have more losses. There will be periods that you will have more profits. What matters here is the risk reward for the longer run. And if you keep that positive, like I show you here, you would be doing well. But this is very important to acknowledge and understand and realize completely since the very beginning, before you start working with that. Okay, so I want to talk about one mistake that my traders did here. This was the EuroCAD buy. We did have trending structure, we did have the levels, but we did not, and we did have a bullish hidden divergence, but we did not have here a verification on the lower time frame. And because of that, that's too early. One of the very important things in hidden divergence trading is higher time frame not against you, lower time frame supports you at the end of the correction. In that case, it was missing. And yes, I cannot blame them by taking this trade, because the risk reward, if they would be right here, they would be cashing out like monster risk reward. In that case, they lost, and it's part of the game. Everyone does mistake, myself, my guys, and you will. You can't avoid mistakes. But even with the mistakes, if you keep the risk reward positive, you will be doing profitable. And that's the name of this game. I want also to talk about the Aussie Kiwi, but I think you already saw this one from the Triple B. Classical trade. Okay, but the first attempt failed for us here. We had classical trending structure. Okay, strong rejection zone. bearish divergence on the histogram, and yet this one didn't deliver. We also had a flip here, lower lows. We saw that on Triple B before. This one lost. It did provide a new opportunity, then it delivered, of course, but in the first attempt it failed, and it's also part of the game. And the Aussie Kiwi, Aussie dollar, I think this one worked for us. Yeah, this one worked for us. Also, what do we have here and why it's so important to pay attention to? The levels. Okay, uptrend, the lows in play, a bullish divergence in play, negative, positive, negative flip, histogram, and moving averages right here. Classical divergence, beautiful engulfing. I love to work with the engulfing this way. And we are heading back to the highs. Okay, risk reward in our favor, easy trade, got paid. Okay, so the importance of the risk reward, that's what I wanted to put the focus on the divergences in this week, in this review, because it is completely underestimated by the traders. Traders pay attention to indicators, to support resistances, candles, but not the management. Why? Management is key element in trading, and I wanted to explain you two different approaches to the management, with smaller risk reward and bigger success rate, or bigger risk reward and smaller success rate. But regardless which one you follow, stay loyal to that. Okay, and then you will see results. So that's pretty much it for this video. I hope you find it useful. Hit the like button below the video. Your help is very much appreciated and important to me in the channel. And I would like to thank you for taking the time to listen to what I have to say. I hope the message here is clear. I hope you see that we don't know how to make any sort of magical returns, and each of us can go through bad day, week, or months. It's part of the game. And it's important you understand that, my friend. So many fake lies out there that you can make endless amount of numbers in trading. It's absolutely not true, especially if you have no idea what you do. Don't forget, you are going in an ocean full of sharks that look to put their hands on your money, exactly like you look to do with their money. You have to do the things right, and it starts with technical principles, proven trading systems and strategies, and management. Never ever underestimate this important factor in trading. Okay, my systems are available for you below the video in the description or the pinned comment. Feel free to ask any questions if you have any. I'm here for you. My team is here for you, and I wish you all the best. Stay safe, be healthy. See you soon with more videos. Take care. Bye for now.